Three, two, one. Welcome to the show, guys. What's up?
All right. Welcome to 4th of July.
Yeah, it is. 4th of July weekend. Feels like it's going to be Christmas tomorrow.
It does, doesn't it?
Keeps flying by, man.
Yes, it does. You know what I just thought of?
What?
You know what I just thought of? I was watching my favorite show on YouTube last night. It's the Wealthy On channel. And periodically throughout the show, the host always says, hey, if you like what you're watching, hit subscribe and hit the little bell icon.
Yeah,
so we don't have a little subscribe button. Yeah, we never say that. We need to say that, though, because if you're watching this thing on YouTube and you want to know when the next show comes out, which it comes out at 6:30 every Sunday night, but hit the subscribe button and the bell button, and then you'll get the show.
Yeah, do what Jerry said.
Sorry, Conan's fixated on some not technical analysis, technical making of the show happen.
All right. I got all this audio visual stuff going on in front of me. Yeah, sometimes I get distracted. I get the easy part. Folks. I just look at the he just talks and looks pretty. That's all you got to do. All right, what you got for us this week, man?
You ready? All right, here we go. Weekly Update Show, 3 July 2022. We got a pretty good mix of things to talk about. The first part's going to be a part rant, part kind of really important educational piece, right? This idea of paper losses and what that means. And a bit going along with that is before you can climb out of the hole, you have to stop digging.
Is it really going to be a rant?
I mean, it's going to be a bit of a rant, but I'm going to try to temper it with a little bit of educational value. I mean, I feel like
your rants don't get us in trouble.
Well, yeah, that's true. I mean, I'm not wearing a "Hope is not a strategy" T-shirt, which I agree with. However, this is before we can even get into strategies and how to really look at your account and all that. You have to get a couple of really important concepts down first. And so let's just start with it here before we go to the next slide. But this idea of a paper loss, okay? It's all over Facebook. People believe it like it's gravity. If you have $1 million in your account, right, it means the value of your account is worth $1 million. When you buy shares in TSP, you're contributing new money. That's when you're buying shares. When you're selling shares in TSP, it's when you're selling shares to withdraw the money so you can spend it, okay? Everything in the middle is reallocation. So let me go to this next slide for a second. So this idea of paper losses, right? All losses that you take, and it's not really a loss, it's a drawdown, okay? A drawdown is the difference between the high and where you are now, right? Assuming it's lower. There is no term that I know of for a draw up, but a drawdown is the difference between the last top that you're looking at and where you are now that's lower. That's a drawdown. That means the value of your account is less than where it was at the top. You didn't buy or sell anything. You're, like I said, buying, right, is when you put new money into TSP. Selling is when you sell shares. You're redeeming those shares so that it can go into your checking account and you can spend it. Reallocating is everything that happens in the middle. Okay.
Basically, reallocating. Your entire career.
Yes, it's your entire career. It's not the same as selling. You have a bucket of money in TSP. The value of that account is based on what the underlying assets that you own in there do. Okay. If you're allocated in the C fund, and the value of the C fund goes up, the value of your account goes up. If you're allocated in the C fund when the C fund's going down, the value of your account goes down. So if you have $1 million in January, let's say in TSP on January 1st, 2022, and you rode some of this market down, say 25%. Now the value of your account says $750,000. That is the value of your account. If you reallocate it from the C fund to the G fund at that point, you still have $750,000 worth of reallocatable asset. Okay. If you moved it back to the C fund the next day, you'd still have that value. So it's not the reallocation that creates the loss. It's being allocated in funds that go down that create the loss. And the other part of that is people say, I see it all the time. If I move to the G fund, then I've lost all my money. And it boggles my mind that people could see it that way. I don't really know how else to say it. Reallocation does not create the loss. It's being in the funds that are going down that creates the loss. So let's try to look at it this way. This is a 5.5-year chart of the C fund. Okay. Ordinarily, we look at the 2 or 3 year weekly chart. This is a 5.5-year weekly chart because I wanted to expand out the view a little bit just so people could get the idea. Because once you understand that it's not about which fund you're in, it's about the direction of the fund that you're in. Okay. The easiest example is here from 2020, from the low in COVID to the high in January. This is the easiest example, but we're going to look backwards a little bit in a second. The blue line is the 20-week moving average line. Okay. Once the stock price, and we're talking about the C fund here, once the price got above that blue line again after COVID, right? So we're not talking about the bottom. We're talking about once price got back above that 20-week moving average line, it consistently found support every time it did a little correction, right? Every time until January of this year. Okay. So you watch the value of your account go up because the value of the C fund went up. So what's happening now? Ever since January, every time the C fund came back up and hit that line, it got pushed back down, right? It can't get back above it. It becomes resistance instead of support. And so what does that mean? It means the trend is down, right? Back here, the trend was up. Now the trend is down. Just like we had no idea when this top was going to happen, we have no idea where the bottom's going to be. The only thing we know is that right now the trend is down. So we're not trying to look into the future when we do this. We're just acknowledging what is, right? If the trend is down, then the value of your account, if you are allocated in the C fund, is going to go down. It isn't any more complicated than that. So what you're looking for is for eventually some kind of bottoming pattern, and then the trend will start to go back up. And when this blue line, when price crosses that blue line to the upside, right, now we're back into a situation like this where most likely it continues higher and this trend line this moving average line becomes support again. It's pretty much that simple to catch the big moves, right? You can see it all the way back here to 2017, just because I just went back 5.5 years. All of 2017, we had support along that 20-week moving average line. We had a bunch of churning here in the beginning of 2018. And so we might have gotten in and out. We might have taken, minimal losses along that line. That's what the market does. That's the way it goes. But we got support here when we got above it. We got support here. And then we had a big run up here at the end of 2018, right? Or going into the second quarter, really. Then we had a big move here below that 20-week moving average line, right? And if you guys remember, most of the losses in 2018, which was a bad year for the stock funds, most of the losses came in this section right here, right? And you could have avoided them because if you had gotten out on that week when it closed below that 20-week moving average line, you wouldn't have taken any of these losses. Now you would have gotten back in when it got back above that line, right? So really, you didn't make very much, right? Because if you got out here and you got in here, it was pretty much a wash. But you didn't have to deal with all this, and there was no knowing how low this was going to go. So it's managing risk is what we're talking about doing. It's managing risk. And the same thing in 2019, right? Once we got back above the line, we had a nice run in 2019. We had 1 week where we broke below it, right? It was a head fake basically. So you get out there, you get back in here. We would have taken a little bit of a loss there, but then we got these gains. It's just using technical analysis to catch the majority of the big moves and avoid the majority of these things, right? In the long term in TSP, we're trying to avoid this stuff. And it's absolutely doable, but you do it based on technical analysis, not based on what you think is going to happen in the future. All I see in Facebook now is, the market's down 20%, 25%, 50%, whatever. It must be at a low, so now must be the time to buy. The trend is down. The time to buy is when the trend is up. It's that simple. What you want to do is identify the trend change as early as possible, because then you can maximize, the gains going forward. But it makes no sense to buy the C fund now when the trend is down. Now, this isn't the only strategy. There are other strategies, but
you're buying a depreciating asset.
Yeah, you are.
And it's just, I think it's hard for people to wrap their head around. Can you go backwards to the one slide, just so we can have those bullet points up about the fallacy of paper loss? Because I think Jerry tries to show everyone on the chart exactly what the data shows, right? What's there. But I think if you just accept what's on this slide, right, just at its core piece, you're only buying shares when you put new money in there, right? And you're only selling when you take money completely out of your account and put it in your another account, checking account, IRA, whatever.
Right.
That's when you're truly selling everything. Everything in between is just reallocating between funds. And so those funds are trending up, you want to be in one. If they're trending down, you want to be out of it. And our safe space is our G fund, where by law it can't lose money, right? So that's really the simplest piece. And if you can't wrap your head around that, you're going to have a very difficult time trying to manage your TSP, because you're going to buy into this narrative that you hear all over the place on Facebook and social media everywhere, where they're talking in broker language, right? And brokerage accounts and buying and selling shares of companies. And that's not what we're doing in an IRA, a 401k, or our TSP. Yeah. You're reallocating between funds. And I know that may sound like we're making it simplistic, but it is that simple. So the quicker you can get your mind wrapped around the fact that your account balance is your measurement tool. Is your account balance lower? Is it decreasing, or is it increasing? If it's decreasing and the trend is going down, you need to think about getting out of whatever you're allocated to, because it's going down. If you and you, again, like Jerry pointed out, you can't catch the quick up and downs. The TSP game is long, and you want to go with the big trends. But take time. Go ahead.
No, I just want to say right now it's very difficult, because people look at their account and they say, I'm down, $200,000. And if I move to the G fund, I've locked in those losses. Okay. There is no such thing as locking in losses, just like there's no such thing as locking in gains. Nobody ever talks about how I better reallocate when the market's going up, because so that I can lock in my gains. It's not a thing. No, you never hear anybody say that. Well, how can it be that you can lock in losses, but you can't lock in gains, right? That doesn't make sense. The whole thing, it's just not true. Your account value is what it is. How you distribute that value is going to determine whether or not that value goes up and down. And so if you can get your mind around that, it's the first piece. Then you look at the chart of the funds that you are allocated in. If the trend of that fund is down and you're down $200,000, there is no possible way of knowing when the trend will change. So your choice is to just ride it out, which seems crazy to me. Or no matter how far you are deep into it, you stop digging the hole, right? You just stop by moving to the G fund. And then when the trend changes, you get back in. It would be great if everybody had been paying attention to this back in January. If you were a subscriber to our, site, you did. You got out in January. But you are where you are now, wherever that is, and you can either hope for the best or you can stop digging the hole. And no one can tell you. Like, I see it all the time on Facebook. I'm this far from retirement. This is my allocation. What should I do? What you're asking in that question is, when is the market going to turn back up? And if somebody answers that question for you, you should run away from that answer. That's all I got for this. Hopefully that helps you guys. It's the most important fundamental first piece before you can really start in any effective way to manage your TSP account. Okay. All right, completely switching gears. Literally, I have to reshuffle my brain to go back to this. Last week, for the last couple of shows, we've done some stuff on the mutual fund window and the new TSP system and all that. So this week, I was on the phone quite a bit with. I spent 90 minutes listening in to a call that the Federal Retirement Thrift Investment Board lets the public sit in on. It's the fourth Tuesday of every month at 10 o'clock. I have the schedule. I'm going to show it to you guys with the call-in number in a minute. But listened in on that call, and there were some briefings about how this new system has rolled out. The board is not happy with the contractors. I know there's a lot of people that have a lot of problems with it. Some people are having a hard time logging in still. Beneficiaries are still messed up. If you get into the mutual fund window, there's other problems with that. Couple interesting takeaways. Of the 6.6 million TSP account holders, only 1.1 million have logged into the new system. So after a month, we still only have, 1 out of 6 people that have TSP accounts have logged in. And according to the presenter to the board, it's not because of the system not being able to validate you anymore. That was the case in the first couple of days. They had problems with people getting a new username and password. At this point, everybody who's trying to get it apparently is able to. So the problem is there aren't that many people that are even trying to log into the new system, right? Only 1 out of 6. It's not good. And the mutual fund window, as of last Tuesday, there were only 857 people. 857 out of that 1.1 million that could log in, 857 funded a mutual fund window account. Very, very, very small percentage. So we're not going to do too much more on the window itself on this presentation because I still have some work to do. I will say that if you are in the mutual fund window and you go to the fund screener, the links to the individual funds do not work. So at some point, they'll either build a back end. It's A-Light is the one company, and Accenture is the other company. The two contractors on this project, and at some point they'll link those funds to Yahoo Finance or Bloomberg, or they'll build their own back end. But right now, it's not there. So it's kind of frustrating if you're in the mutual fund window right now. Okay. So if you go to, this is the site for the Federal Retirement Thrift Investment Board. This slide and the next one is going to be the homepage when you go to that site. Pretty interesting stuff in there. We're going to take a look at the board and how the board gets selected. There's a lot of good stuff in the reading room. I got a slide on the meeting minutes because that's something you guys are definitely going to want to take a look at if you're interested in this stuff. And then the strategic plan is really what we're going to kind of focus on. The second half of the bottom half of the main window, this is what they're saying their goals are, right? So if the retirement board is charged by law to administer the TSP solely in the interest of participants and beneficiaries. Of course, that would be their mission and their goal. We seek to improve participant retirement outcomes, provide top-tier defined contribution services to participants, function as a high-performing agency, and transition successfully to a managed services operating model. So that last one is really the one that kind of Conan and I piqued our spidey senses here, because everything is being contracted out.
Which can be looked at, as both positive and negative, right?
Yeah.
We talked about this where it's like, if the model of, so one of the arguments for this type of thing is that the government outsources things that the private sector does better, right? The government is not really known for innovative technology. Most time if you see innovation, it's probably because it came from the private sector, generally speaking. Yeah. And so we're good at managing large things, projects and stuff. That's the general argument. And so this should be the correct way to go if you kind of agree with that argument, right? On the other hand, what we've noticed is because you're shoving the private sector into the government bureaucracy, right? Then that's what breaks the innovation. And so what you have is government wonks running what could be innovative things. And so, and I say government wonk, that's not to be derogatory.
Yeah, having been one.
we was one, right? It's like if you could say redneck if you are one, right?
Right.
Like if you is one, you is one. Anyway, that's not to be a negative thing. It's just, it is bureaucrats mixing with innovation doesn't always work well. So, but that's kind of there's two sides to it. So what, I'm kind of hoping, that over time, innovation wins, but we're a little pessimistic because we spent 30 years in the government. Because it's interesting, if you go look at something like TD Bank, TD Ameritrade buying Schwab, they didn't just shut it down for a week and then come back with something broken. What they did was say, okay, we're going to slowly kind of add these services, take away these. And nothing ever broke, and nobody, everybody still had access to their accounts. And why can they do it? And I think they're larger than the TSP.
Yeah,
I'm pretty sure there's more than 6 million accounts.
Yeah, oh, for sure. And when we get to the slide about who's actually who's on the board and who's running it, they're very high-end financial people, and the product that they allowed to get put out is really unacceptable. Okay, so this overall satisfaction, clearly that was before the transition, because there aren't too many people that are extremely satisfied right now. Okay, so if we flip to the strategic plan, so we go to the reading room and the board strategic plan, hit the link, you get the PDF. Here's what it looks like. Participant outcomes, participant services, which is really what we're kind of focused on, mutual fund window, not working well. The transition strategy, and this is the internal, metrics for how they judge themselves within the agency. Goal number one is to improve participant retirement outcomes. I would argue that if that was your goal number one, you wouldn't limit the mutual fund window to mutual funds. Nobody in the financial world uses mutual funds. It's all ETFs, and even that ETFs at this point are getting a little bit dated. So if your goal number one was to improve participant retirement outcomes, I think you'd have some better options. Goal B, provide top-tier defined contribution services to participants. We'll see how that rolls out. The launch of the mutual fund window, it's a great idea. The fees are one thing. You'll have to take those things into account as you work through it and decide, whether you want to use the mutual fund window or not. One of the things that it says if you go to tsp.gov and you kind of click through there, it's about the transition and about the mutual fund window. It says that there are going to be essentially financial planners or financial experts that can help you. You can call the thrift line and they will help you create a portfolio. And that is true. I called the thrift line a couple times this week for a couple different things. I did get a guy that was very knowledgeable. He came from the financial industry. He started into his spiel about helping me, use the mutual fund window and ESGs and all that. So he definitely has some background there. Unfortunately, when you call the thrift line, there are 6 automated, canned responses. So it'll push you to one of 6 things. So one of them is you want to set up your new account. The other one is, if you have general questions. There's one about loans. There's 6 different options. None of them are related to the mutual fund window. So you can't get to a financial guy through the automated system. So you call and you wait on hold and you tell them you have a trading question, and they send you over to that help desk. And when I got there, the guy was laughing because he's like, my phone never rings. And it never rings. And he asked me if there was an automated piece to it. And I said, no, I can't get to you via the automated system. So he took some notes about that and hopefully pushed it up his chain of command. Maybe at some point we'll have, a 7th part to that automated system. However, as of last Tuesday, there were only 875 people that would be calling. So, I'm not sure how
they're going to add that feature right now.
Right.
We'll see.
I mean, I'm thinking like, unless they get more people in this mutual fund window, why would they want to pay Yahoo Finance or Bloomberg for the link from the funds to, because you need to have that, right? What I'm talking about linking to is all the information about the fund, what's in there, how it's managed, what the important things. A lot of these mutual funds have minimum $3,000 to $5,000. A lot of them is the minimum amount that you can contribute to be in the fund at all, right? And then the fees that are internal to that, the dividends, all that kind of stuff is what I'm talking about. We should be linking to, and that of course costs money. And supposedly the people in the mutual fund window with this $150 annual fee are the ones that are going to be covering the cost of all these capabilities. Right. And so if they don't get enough people in the window, like if I'm the contractor, I'm hoping it's a firm fixed price because I'm getting paid anyway. But if not, like this, I don't know. It's on shaky legs before it even begins, I think.
Very interesting.
But yeah. And then again, transition to this managed service operating model. So if it works, it'll be better than the thrift line was before. It's going to take some time. And we haven't even gotten into, I know there are horror stories out there about, hey, I was in the G fund in April and then I haven't looked at it again because the market's going down. I'm in the G fund. It's all good. And now I log into the new system and it shows me 50C, 50G, and I've just lost 40 grand. I mean, there are those kinds of horror stories out there. And if those things are actually happening, I don't know how they go back and make those people whole. I mean, I hope that they're just, I don't know, glitches in the system and it gets sorted out. But it's kind of a disaster right now. So if you have any interest in the board and how it's established and all that, my biggest takeaway from this is kind of the beginnings of how it's laid out in the law. The board, I mean, these aren't GS15s. They're not, SESs. They're appointed by the president. Everybody on the board appointed by the president. There's a chairman. The members of the board are also appointed by the president, right? They're very, very high end people. It's not a cabinet level position, but to have to get confirmed by Congress is a pretty high level position, obviously, and they're the ones that are making the decisions about this. You can go through the whole thing. Really was established in the FERSA, Federal Employee Retirement System Act from 1986. It talks about basically 4 years of each member of the board. It's worth going through here if you have an interest in the law. Okay. If you flip over to the meeting minutes, okay. So the call that I said that I was on last Tuesday, there are recordings of all the previous calls in the meeting minutes. And if you want to subscribe and get the meeting minutes in your email, I would highly recommend it. The other thing here is the calendar for 2022. So this is it. So I was on the June 28th call right here, and this is the call-in number right there. Okay, so the next one is July 26th, 10 a.m. I will certainly be on the call. It's pretty interesting. It was about 90 minutes long. I don't think most of them are probably that long, but this one had a lot of briefings about how the new system was rolling out. And I imagine the July call will be actually more interesting as they get more data going forward. And so the board, right now, acting chairman of the board, David Jones, okay? He ran an independent consulting firm, and he was a trustee for a number of families and their entities in 2004. So that's what's called a home office, and it's big money in New York. Let's just leave it at that. That when people that run home offices, they make a fortune for their really wealthy families and entities that they're running money for. And before that, he's the managing director and senior client executive at Deutsche Bank Private Wealth Management. Okay, I guarantee you, Deutsche Bank Private Wealth Management would not accept the product that these guys have put out right now. It boggles my mind that the people are at this level and they put this out. Princeton, Harvard Business School. I just, if I was him, I'd be doing everything I could to fix this thing, because it definitely makes them look bad. And all the members of the board, I didn't go any deeper down, but you can see they're all high level people. So hopefully they figure out a way to fix it. Okay. All right. Switching my little brain again. I put out a chart I do a weekly TSP or Facebook Live on Wednesday, every week, 2:00. So if you guys want to check that out, it's every Wednesday, 2 p.m. East Coast time. I'm doing a chart of something that kind of catches my interest. And this week I put up this chart. Okay. There's a lot of politics and opinion around whether or not TSP investors should have access to the China market. Everybody has an opinion. I certainly have mine, but my opinion is extremely secondary to the performance of the fund, right? So the only reason I'm putting this up is to show the difference between where we are in the C fund right now, what our chart looks like, and what if China had a C fund, this would be it. The ticker symbol is FXI. It's the China Large Cap ETF. Okay. It's an ETF. It's not a mutual fund. But if China had a C fund, that would be it. So why am I doing this? We put this chart up every show, and we've been talking about it for months, right? And we talked about it earlier. You got the 20-week moving average line. You got RSI, CCI, and MACD. Okay. What we want to see happen to get back into the stock funds is price gets back above that 20-week moving average line. RSI gets back above that 50 line. CCI is above the 0 line, and the MACD has turned positive. Okay. Those are the things that we want to see. And it's the same thing on the downside. So in January, price closed below that 20-week moving average line. RSI got below the 50 line. CCI got below the 0 line. And the MACD crossed negative. Okay. So that's what's happened in the C fund. In China, it was the same kind of thing. We had the COVID low here, just like our COVID low here, right? China topped out earlier than we did, right? It was February 2021. Ours was January 2022. But once China topped out and price got below that 20-week moving average line, every time it tried to get above it, it became resistance instead of support, right? Same thing as was happening on the C fund. The difference is, right now, while the C fund trend is still down, the FXI for the past several weeks is trying to find support at its 20-week moving average line, right? It's above it right now. RSI is above 50, CCI is above 0, and MACD has turned positive. So forget about China and US. The point of putting these two up side by side is to show this trend is down. This is the beginning of an uptrend. Okay, these are how we want the technical indicators to look at the beginning of an uptrend. So do we buy at the bottom? Absolutely not. We buy when the trend, when there's some reason to begin that a new trend is happening. Ideally, you can see the 20-week moving average line is starting to turn up. If it stays going up and we get support as we go forward, then the trend is going up now, right? We don't have that in the C fund. So that's what we're looking for. So forget the fact that it's the China ETF. This is the beginning of a new uptrend. And if it rolls over and price closes on a weekly basis below that, if this is just a head fake, kind of like this, right? Or kind of like this one in the C fund, it'll roll back over, price will close below it, and it'll trend back down. And if you were in it, you would just get out of it. It's that simple. Okay. All right, TSP fund charts. I'm not going to go through and regurgitate this again, but again, this is the 2.5-year weekly. Here's the COVID low. We got the 20-week moving average line. Once price got back above, RSI was back above 50. We stayed there, got support all the way along until January. We got price closing, breaking below that 20-week moving average line and breaking down below 50 on RSI. So that's where we are in the C fund. And it's really, really easy to see on this chart on RSI, because once we got back above that 50 line, it never got below it. It was support all the way along for a year and change, right? Until it broke below it. And until it gets back above that 50 line, and we're back above this 20-week moving average line, there is no hope for a sustained recovery, for a sustained rally. It just can't happen. S fund, same thing. It just, the pattern is a little bit different, but it's the same kind of idea. Once we got back above 50 on RSI, right? We stayed above there, got support here all the way along until that big close in November of 2021. RSI broke down below 50, and it's been there ever since. I think you guys got the hang of it. It's very simple. It's just that most people don't use this tool. iFund, same thing. And we could talk about all kinds of other, this is a frowny face, as our friend JC likes to say. You don't buy a frowny face, you buy a smiley face. So imagine if the market's coming down, comes down, does like this, right? This is a smiley face. You want to buy. It's just different ways of talking about the same thing. And as you can see, once we got above, we get above the moving average line, we get RSI gets above 50. We're good for a while. Did we have a little dip head fake below here? Sure. That 1 week. Absolutely. You get out, you get back in here, you took a little bit of a loss, but you got these gains and you were set up to get these gains, and you stayed in until this big breakdown. And if you really wanted to be sure, you absorb this breakdown, no problem. But then when this high was lower than this high and you got another breakdown below it, I mean, that's it. This was January. So the I fund was kind of hanging in there longer than the S fund did. But all the indicators were there. It goes back to what we were talking about in the very beginning. You want to be in the funds that are increasing in value. And if you can identify that we're in a down channel, that fund is decreasing in value. Okay, so the F fund, right? This is actually interesting now, because here's the I fund, right? You can see we are well below that 50 line, right? On the F fund, we're starting to turn up. This is the smiley face, right? We're not back above 50 yet, but we're going in the right direction. And price is really churning. There's a lot of activity going on in the bond market, and our only exposure to the bond market is the F fund. But it's just like anything else. If price gets back above this 20-week moving average line, RSI will be back above 50. We don't have CCI and MACD on here, but MACD will have crossed positive and all that. So basically above 104, right? And this is the last high. So basically above 104, and you're probably good to go in the F fund. Okay.
Questions.
I think that's all I got.
That's a lot, man. That was great. Can we go back to the rant again, or is that enough?
I think that's enough for a rant.
Probably enough. Yeah.
You know what it is? It's there are two pieces to this thing. There are people that are so committed to their position that they won't listen to what we're saying. And it's unfortunate because if you can't see that the game has changed, right? It's like you were playing hockey from the low after COVID to the top in January, and now we're playing basketball. And if you can't see
that we're playing basketball,
there's two different games. Yeah. That's literally it's like that. It's a completely different game now.
Well, hopefully people will just watch and rewatch those parts. And also, I mean, if you have downloaded our ebook, Jerry wrote an ebook called How to Invest in Your Thrift Savings Plan. It walks you through all of that, and it gets all these kind of fundamentals and principles in front of you. And if you're gonna manage your TSP account, why not be educated? And that's why we're here. So if you like the video, please share it with your friends. If you don't, share it with your friends. If you do have questions, make sure to put them in the comment section wherever you find it, YouTube, Facebook, wherever. If you find it somewhere there's not a comment section, you can always email us at support@growmytsp.com. I was about to say questions. I was like, nope, that's not that one. Support@growmytsp.com. Yeah. So shoot us a question through there. If it's something about your personal finances, we may not be able to answer it. But yeah, if it's general questions, we're happy to get back with you. I hope you guys enjoyed it. And I hope you guys had a safe and wonderful 4th of July weekend. And we're out of here.
Yep. We are out of here.